You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it is time once again for a little show I think we all need around this time. Yep, it's time for the option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting, or maybe in these days, ever-calming Options Insider Radio Network. Let us talk you back from the ledge, as much as we can, at least, with the world melting down out here. Of course, coming at you every Monday and Thursday on the old OB. Live every Monday and Thursday, like we said, noon Central, 1 p.m. Eastern, after the fact. Get it however you get your favorite podcasts. And, of course, if you like what you're listening to, leave a nice review to help new people continue to discover the program. You know, we've been chugging along here for quite some time. A lot of folks tuning in over the years, but we like new ones all the time. So if you want to share the love, we won't hold it against you. And, of course, keep those questions, those comments coming. We do enjoy hearing from you guys. Let's see who else I will enjoy hearing from today. Let's start with a tranquil hamlet. You know, it's good on a day like today where everything else is melting down to go somewhere tranquil, peaceful, happy, safe from all things coronavirus. Yes, I'm talking about St. Charles, where we are joined once again by the unflappable Uncle Mike TOSAW from St. Charles Wealth Advisors. Uncle Mike, welcome back to the program on this beautiful Monday morning, sir.
Always good to be known as unflappable. I've never been called unflappable before, but I think it's a compliment, so I thank you, my good man.
Yes, it is indeed a compliment out there. Beautiful day, pretty warm, pretty sunny here in Chicago. You know, all is right with the world. And joining me to help me discuss such happy times, we also have the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to the program on this perfect, beautiful Monday, sir.
Yeah, quite the day, don't you think?
Not a lot happening. I thought about maybe canceling the show out of sheer boredom, but I thought, well, what the heck? Let's keep going. What do you think?
I gotta say, I guess it's a good day to live in St. Charles instead of St. Corona.
Yes,
you might say,
yes,
or be in a long oil bowl.
Yes,
because not a great day for anybody around.
Yeah, not a great day for a lot of things. I think I saw someone tweeting that Clorox is up on the day. So there you go. Clorox, the green on the screen as we head on into a somewhat head-scratching trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right. Welcome to the trading block. Where to begin? On a day like today, there's so much to parse. I think you can just sum it all up in that the world has collectively lost its mind on a variety of fronts, not just coronavirus related. Coronavirus certainly was the catalyst that seemed to unleash this wave of madness behind it. And that's really seems to be what is doing the damage, not so much the disease itself, but just the strange reactions we're seeing across the board as a result of it. Let's start with what the heck is going on out there in OPEC land, or I guess you could say formerly OPEC, now OPEC and its former friends, the Saudis and the Russians, not exactly seeing eye to eye over the weekend. The Russians have always been a little bit recalcitrant when it comes to playing along with those cuts. They're always cheating here or there. And these days they're saying, yeah, we're not going to have a production cut. We're not going to step in to try to support crude at these levels. And so, of course, what do the Saudis do? They say, oh, yeah, well, we'll see you one, and we'll double down on just squeezing the heck out of you and everybody else here now with a production increase. So we see WTI and Brent just taking it on the chin, just annihilated. WTI at 33. We were talking on TWIFO just last week about how it seemed like people were flocking into those 40 puts and in WTI, and how it seemed like if 40 is a pretty dramatic level. If WTI stays shy of 40 for a substantial period of time, that's going to be damaging to a lot of people, particularly a lot of the shale producers here in the U.S. Those wells have a shorter lifespan and a higher production cost. It costs more to pull that crude out of the shale wells, and so 40 is a dangerous level. Well, how about 33 and change? Because that's where we find ourselves right now, off 8 handles just today. And that's just on the crude side of the fence. And that, of course, kicked off a tizzy across the board, to use a technical term. We saw Asian markets off, a lot of oil-producing rich regions really getting annihilated. That led to circuit breakers being triggered here, and CME and NYSE effectively on the open, on the bell, open and off on the circuit breaker. Not a lot of good can be said about that. When you're open and off, pretty much halted, that means you got a crazy day in front of you. If that wasn't enough, we got North Korea deciding, hey, the world's melting down. Why not launch some more missiles into the fray? Let's just stir the pot a little bit more. So that's adding fun. We've got this endless debate here in the U.S. domestically. Not forget about the political side, just in terms of, how prepared are we? Should we be prepared more? Should we have more testing kits? All these things. That's all feeding the frenzy. We've got, of course, New York saying you shouldn't take any mass transit. Everyone should telecommute. We got states of emergency in Los Angeles being declared. So a lot of interesting things. And if all that's not enough, we've got our friends out there in BLOOMBERG taking the time to write about 100 lot of VIX calls, about a $2,000 outlay, because someone had the temerity to buy the March pars, 100 lot of them, going out tomorrow. And that caught the eye of Bloomberg, going up for 15 cents 100 times. So there you go. That's the environment we find ourselves in, listeners. Someone's trading the March pars, a whole 100 of them, for 15 cents. So shelling out a whole $1,500. But hey, it got picked up by Bloomberg at the very least. All this is translated, as you might imagine, into just massive sell-offs across the board. Every index, except for the NASDAQ, off over 6%. The S&P off about 6.1%. The Dow off nearly 6.5%. The NASDAQ off a comparatively meager 6 1/3. Gold actually is even coming in. This kind of, not much, it's kind of slightly off on the day, but still this kind of goes back to the old joke that when it all hits the fan, correlation goes to 1. At least for right now, that seems to be the case. Even the supposedly uncorrelated crypto taking a bit of a bath there today. We'll get to that later on today on the Crypto Rundown. Got my old buddy, Mr. Bill, joining me on that show in a little bit to break down what the hell's going on out there. But before we get to that, let's go back here around the horn. I haven't even hit the numbers for where we are right now in terms of the major indices. VIX coming into showtime was at about a 53. It's still right about that level. That puts it up a whopping 16 handles. From where it was last show. Intraday, it actually hit over the 60 handle, the cash, 62.12. We got VVIX. So the volatility obviously moving. That's up a whopping 28 handles from where it was last show. Listeners, at a 143, in case you're wondering. To hit a high of 150 this morning, and back on the VIXocalypse, the financial meltdown of February 2018. Actually, right before it, the January 29th is when VVIX hit its most recent high previous to this, and that was 203.73. So that puts it a little bit in perspective of where we are right now. Not quite at those levels, but still crazy frothy, crazy turbulent. And our old friend VXX threatening the 40 handle, the upside, 35.35, up 10 handles from our last show, and actually hit a 40 handle ever so briefly this morning. Hit 40.64, I believe, earlier this morning. So it pretty much has erased all of the erosion for the year and then some. Right now, let's go back around the horn, the opposite of the way we came. Let's start in the greases meatball. Mr. Meatball, a lot. I don't know pick your poison where you want to start, sir. A lot of things popping off as I kind of just broke down here. What's catching your eye, sir?
Well, a lot of people are asking me, what does this, what is this? What are we looking at? Is this the bottom? Is this the top? Let's start by, I would invite everybody to look at a chart that's longer than a year and take a look at like the S&P 500, and you get a kind of a different picture of what's actually happening, right? I mean, it's so easy to say, oh, look how, should I sell my stocks? Look how much, we've already lost so much. Well, the spider's about 280, which would be about where the absolute peak that we all thought was nuts high on January 29th, 2018, the day before the Volpocalypse. So on January 29th, 2018, if you sold, you had an opportunity to buy all the way down at $230. You could have bought within a week, $252. This is a really peaked, like if this is the bottom, then we're at, we're not even really to kind of what we saw at the end of 18, beginning, December of 2018 levels in terms of, how far we could go from, let's say, kind of the September top, October top, all the way to the bottom in December. So there is plenty of room for the market to fall. I mean, you don't really run to a place where the returns don't look exponentially high until you get down to about 2,200, call it 2,250. So there is, I would say another 600-700 points in the S&P that are at risk of coming out as people look and say, I want to maintain my wealth. And so, when people ask me, I'm like, what? Does it really make sense to sell a little bit here and hope to buy more later? Yeah, why not? And I would rather buy 3,100 on the way back up than hold out all of my account at 2,800 and be paralyzed and unable to do anything if the floor falls out. This oil move is a really big deal. It's going to cause a lot of bankruptcies, and it's not really priced in fully. Exxon was below 40 earlier today. It's off about 10%. Halliburton is down 36%. Transocean rig is $1.62. $1.62, folks. So when I think about what I'm looking at, this starts to feel like kind of late July, early August 2008. Before things really fell apart, but right about the time that everybody's going, oh, crap. So I don't know that this is a bottom, but it doesn't really feel that way. That being said, I had thought that the market was going to be a lot uglier as the day rolled on, and there are buyers out there. So, if you're looking for a green shoot, you could say the NASDAQ 100 only down 4.5% is your green shoot.
There you go. That's your nugget. That and Clorox are the two things you can cling to on a day like today. Because you're right. The oil side of it. Who anticipated going into the weekend that we'd see a price war to the downside in oil? Yet that's where we find ourselves now. That's why I mentioned it's kind of the ancillary madness that has been unleashed by this coronavirus that seems to be doing the most damage. And I'm with you here. I would not have any confidence in diving in at these levels. I think we have more downside to go because we still don't know the true extent of the impact we're going to see on this. Look at airlines are still flying right now. We may see some sort of stoppage or grounding of some flights in the near future if this continues to spread. We're already seeing panicked things being sent out by companies saying, "Oh, look, we're cleaning our airlines," or whatever. Maybe they're an event company. We're looking at keeping our events going. Look at companies like Disney. They may have to shut down the parks in the near future. That would be a huge hit and just a huge PR hit for them as well. So there's a lot of perhaps other shoes left to drop here before we know exactly what's going on. So yeah, if I was buying in, I wouldn't have a ton of confidence. Not to sound too deeply cynical here, but you're right. There may be opportunities to buy back lower, and we still don't know truly the extent of what is going on here domestically, and that's uncertainty, of course, is fueling a lot of this downside. Uncle Mike, I say all that now as I turn to Uncle Mike. Ever our permeable, ever our optimist, ever our ray of sunshine on it. If we ever needed a ray of sunshine, it is today. Mr. Uncle Mike, sir, what do you got for us? Or are we all just going to die?
All right, so life is back in order right now because you guys are pessimistic and I'm feeling pretty optimistic today. So equilibrium on the show, we are back. All right.
Yeah, I was a little nervous when you and Sebastian and everyone else were all agreeing on cash. That was scaring me more than anything.
So let me speak to the three camps with which I represent: aggressive trading, hedged market exposure, or like collars and that type of thing, as well as buy and hold. So let's talk about aggressive trading. I am a perma-bull with my aggressive trading. However, my rule states that when the market goes negative on the year, I'm pretty much out in terms of my aggressive trading. So to give you an idea of it, I go in per contract in $1,500 increments on my SPY strategy. Typically, within that amount, on most markets, I have between maybe $2 and $7 worth of exposure most of the time. Sometimes a little more, sometimes a little less. But in, I hate to call them normal market conditions, but in market conditions that aren't like this, I usually have that much exposure on the table. Right now, I have roughly 15 cents of exposure. I still have this far out of the money butterfly that I have that I can't get out of. I'm trying to buy back my the short calls within the butterfly for a nickel, but the vol keeps going up and I can't do it. So for the most part, I would say I am roughly 99% in cash for aggressive trading right now. And I think it's unless you are someone who wants to trade on both sides of the market going down, or is playing a different style of game. If you're a bullish short-term trader, I think this is a market for crazy people right now. And that's what I'm a bullish short-term trader. And so I just stay out of it because it's foolish for me to even mess with something like this. And I want nothing to do with it. And best trading year I ever had was 2008. That's when I invented this, or that's when I came up with this rule of mine. I remember the first day of trading in 2008, market was down. I'm like, you know what? I'm just going to not get in until the market goes positive for the year. And as everybody knows, the market never went positive on the year. And I was flat the whole year for my aggressive trading. And so I've stuck with that rule throughout time. And days like today really make me happy that I have that rule in place. So regardless of your sentiment, whether you're bullish or bearish, if you have no risk management and you are trading leveraged instruments like options, then you are a fool. Just trying to be blunt, if you don't have risk management in place, you are a fool. Now, to the second camp with which I cater to, or with which I manage money, hedged equity trading. As of right now, my lines in the sand, I'm still not there yet. So in other words, I'm at the I still have to go down quite a ways further before my lines in the sand are touched with this market. I'm hedged for quite a bit further on this. And so I can't get into exact, my compliance department doesn't like me getting into exact prices and levels and things like that, but I still have a ways to go with that. And so we'd have to have several more days like this for that to even be touched at this point. So for now, it's the account values are lower, but that's just because of the fact that some short options are much higher due to, a 50 VIX. Now, in terms of buy and hold, let's say you're a buy and hold investor. I do have clients that are in stocks for the long term. This is to someone, if you're planning to hold a stock for 2 to 5 years. And I'm not talking about the people who buy a stock or an option and say, oh, I'm just going to make some money real quick in it, and then it goes down. It's like, oh, well, it's an investment anyway. No, that's foolish. Don't do that. You need to keep with your trading plan no matter what. I'm talking about people who are holding onto a stock for a longer period of time, meaning people who are holding Amazon, Google, Apple, stocks like that, or just the S&P 500 index or various funds for that matter. All right. So now I want to speak to those. So I want to tell this kind of explains my sentiment right now. So I have a newer client that we started our process of. I went over their financials and said, I think you need to do this, that, and the other. And so we're in the process of transferring money over, and then they need to send some other money over. And with that, one of the client asked, he said, and this is for the buy and hold section is kind of where we're at with it. And he said, well, Mike, do you think this is a good time to start investing? And I said, well, absolutely it is, because your plan that we have talked about is to hold these investments, these stocks, these longer term holdings, not mutual funds, but just kind of a mix of the ETFs and stocks, let's say, because that's what it is, for 20 years at least. And so they said, is this a good time right now? And I said, absolutely, it's a great time for those. And the reason is that if you were planning on holding something 3 weeks ago, back when we were at all-time highs, back when we were 500 points higher in the S&P 500, why would now not be a better time? Now, of course, if you are trying to wait until we go down another 400 or 500 points, well, we might not do that. This might be the bottom. There's a lot of statistics that say that it could be. Now, there's also a lot of statistics that say that it couldn't be. Who knows? But the point is that your goal, if your goal is to hold on to market-based investment, whether it's a stock, whether it's a fund, an ETF, whatever the case may be, for more than 5 years or more than 10 years, then I think it's a great time to get in. I think it's an awesome time to get in. Here's a statistic that is an undeniable truth of life. And that's how I try to make most of my money management decisions on, are undeniable truths of life. This is a fact. 100% of the time that we've had some type of pullback in the marketplace up until 3 weeks ago, 100% of the time in the over 100-year history of the stock market, it's come back. Now, does that mean it's going to come back now? No. But we have over a 100-year track record of the market coming back at some point. Now, if it waits for another 10 years to come back, that's very possible. We had the lost decade from 2000 to 2010. We had the flat period from 1966 to 1982. We've had a lot of periods like that in the marketplace. So if you're looking to retire in 5 years or in 1 year or 2 years, well, quite frankly, you shouldn't have been over allocated to the market in the first place. Shame on you and shame on your advisor for over allocating you to the market. However, if you have a longer time frame, 100% of the time, the market has come back to make new all-time highs. So I want to reiterate my positions on things. Short-term trading, this is nuts. Stay out. If you're hedged, well, hopefully the hedge is working. And if you have your lines in the sand, be loyal to your lines in the sand. If you are looking to do this for the longer term, because most of my clients anyway have all three of those scenarios within their account, then I think this is a great time to get in. So that is my position on. And another interesting statistic, there's a part A and a part A to this statistic I'm about to mention. I was just kind of looking at this before the show. Oil is up 20% from the lows of the day today. So that's just kind of my thoughts on things. And let's have a great show, guys. This is going to be a lot of fun.
There you go. That's the Uncle Mike glass half full perspective I'm looking for. Oil up 20% since its nadir this morning. That's why we turn to Uncle Mike in these dark, dark times for a little ray of sunshine out there. But you're right. These are interesting, turbulent, some might say insane times. If you have a long-term time horizon, maybe these are times you might want to start nibbling, or maybe you want a little bit more to the downside. I wouldn't fault you in that case out there. Either way, let's see what folks are up to out there in the broad markets. Now, we've seen a few days, shall we say, of plus or minus 2 to 3% in the S&P pretty much almost every day the past week. Not exactly 6%, so we're outperforming that metric out there. But still, the markets are lighting it up, or maybe not as much as you might think given the fact that we're already kind of in shock and kind of fast market mode coming into it. As of a few minutes ago, we saw the VIX putting up not quite 2 million contracts, 1.8 million contracts. So that's a lot of paper, but maybe not as much as you might think. The ADV out there is closing in on 1 million these days, 886,000. So that's well north of when it was down around 300,000 not too long ago, a month or change ago. SPY already over 3 million, 3.2 million contracts on the tape. The ADV is closing in on 5 million contracts out there. 5 million contracts ADV in SPY. That's when you know things are rocking and rolling out there. The S at about 1.25 million contracts right now. The ADV closing in on 2 million. 2 million in the S. Remember, that's a monster of a beast when it comes to notional value out there. The S closing in on nearly 2 million contracts ADV out there these days. The Qs at a comparatively quiet 430,000. Maybe that's partly because the Nasdaq's underperforming from a net movement perspective, or saner heads are prevailing. Who knows? Either way, the Q's actually not that insane given everything else. The ADV is already north of 1 million, 1.1 million out there. So not even at half of its ADV right now. And the Russell, similar levels out there, at least from an IWM perspective, at about 275,000 contracts exactly. The ADV, 488,000 out there. So interesting, kind of depends where you look. The Russell lately has been leading the market to the downside. These days, maybe not so much, but still, it's been interesting to watch how small cap is playing out in relation to large cap and everything else out there. Let's see how things are playing out in the single names out there as well. And actually, perhaps not as many contracts on the tape here as you might expect as well, because it only cost you 124,000 contracts to break into the top 10 today, which is surprising. I thought it would be at least $150. That gets you to Merck. That's 124,000 contracts for number 10 on our most actives. Number 9, Disney. I was just talking about them. There's rumors they may have to close the parks or do some other things out there when a lot of your business is based on in-person people coming somewhere. These days, perhaps not the best business to be in. Disney, 128,000 contracts on the tape right now. Number 8, GE. 152,000 contracts. Number 7, MGM. Been hearing a lot of news come out of Las Vegas and stuff of late that not exactly a big open season out there for a lot of people. It's like a ghost town out there. So maybe some of that playing into what we're seeing in MGM. 158,000 there. Number 6, Ford. $181 on the tape. Number 5, Microsoft. Microsoft's been surprisingly active throughout all this coronavirus heat. Not exactly the first name that springs to mind from an activity or volume perspective when you're seeing global pandemic concerns, yet Microsoft has been lighting it up day after day in the top 10 and often in the top 5, and that's where it finds itself again today. 212,000 contracts, number 5. Number 4, AMD, 231. We're getting into some of our perennial stalwarts here. Number 3, Tesla. Elon Musk, perhaps sticking his foot in it, perhaps not, kind of tweeting out about this whole coronavirus panic is dumb or something to that effect. And Tesla lighting it up today, 237,000 contracts. Number 2, Bank of America, a little north of 250,000 contracts. And number 1 with the bullet, once again, Apple, 426,000 contracts. They're starting to feel the sting out there, of course. Kind of a bit of a 1-2 punch for Apple. Of course, China is a big market for them, and that market has been effectively locked down. So they're feeling a little bit of weakness to demand. Not a little bit, a lot of weakness to demand out there. And of course, that's also the region where they produce a lot of their phones and products out there. So it's kind of a bit of 1-2 punch. Apple off 15, nearly 16 handles, about 5.5%. So kind of in line with what we're seeing out there in the NASDAQ, 273 out there right now. Still amazing. Just to think, not that long ago, we were talking about potentially selling the 150 puts in Apple, and a lot of our audience was panicking and saying, no, get the heck out of Dodge. If it crosses 150 to the downside, something systemically has changed in Apple, and here we are, still nearly 2x that to the upside. So potentially a lot of room to run here on the downside. Let's touch really quickly before we move on, just to keep the sanity flowing. There are, if you are interested in some things, and a lot of people are, if you are interested in such things as micro, there are still earnings popping off here this week. We've got Dick's Sporting Goods before the bell tomorrow. Wednesday, we've got everyone's favorite, Pinduoduo. That's a Chinese e-commerce name out there. Adidas and Vera Bradley on Wednesday as well. Thursday, Dollar General, Uncle Mike's other favorite dollar name. You got Broadcom, Adobe, Oracle, Slack out there. So there are still some big names popping off. Gap after the bell on Thursday as well. So there are still some names to watch if you want to sink your teeth into the micro and do some quick earnings analysis. If you like doing earnings analysis, theoptioninsider.com. We got you covered over there. Click on that options, news, and articles tab. You can see a bunch of news, of course, but also earnings and earnings move results reports up there right now. I wonder how this this tail end of the season here with the sell-off, that may start exacerbating some of the vol, because so far, at least, according to the earnings season report from our friends over there at ORATS, the names have collectively underperformed, with 561 names having reported so far. It's about 76% of the names. The season overall has averaged about 91% of that earnings straddle. So 100% would be if every name pretty much was in line, moving exactly what their earnings straddle predicted. We're at 91%, so we're actually looking pretty weak here so far. The weakest week was actually week 2, with 78% of the predicted vol being exhibited of the movement out there in the marketplace. So interesting stuff out there. I kind of wonder if maybe this bit of a sell-off may exacerbate that. We start seeing more vol creeping in. But either way, and certainly it's going to make next season, next cycle, very interesting. Down at the RMC, the Risk Management Conference, all the talk was of how are companies going to use this coronavirus? How are they going to lean on it as an excuse in the next earnings season? Guaranteed that they are. Earnings season equals excuse season at the end of the day, quite often. So a lot of names that have nothing to do with corona are going to look for a way to pin their poor performance on it. But it should be interesting nonetheless. It'll also be interesting to see what's lighting it up out there. So without further ado, let's get weird. Let's get wild. Let's head on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, welcome to the Odd Block, where we get weird, we get wild. Before we even get into that stuff, I'm hearing from my producers now that yet again another outage today on Robinhood. This marks, I believe, the third now day where they've had a complete system outage. I heard a rumor bandied about. This is not confirmed by any means, but the rumor going around the Risk Management Conference earlier, or last week, I should say, was that Robinhood had mistakenly not coded for the leap day on Friday the 29th, and that is what caused the issue with their systems. If that was the case, I have no idea what would be causing it today. I'm guessing it's just they're overwhelmed by the volume and the movements out there more than these kind of Y2K type conspiracy theories, but that is indeed what was floating out there. But I know if you're a Robinhood customer and you've already suffered through 2 outages, a third on a day like today, that's really going to hit where it hurts. You know, you want to have access to your accounts on a day like today, and a third outage, not exactly good for them. Let's see what is lighting it up. Our Eye of Sauron kind of going nuts today. All sorts of craziness going off. We're getting some crazy prints coming in here as well, some size prints, which let's start off in some interesting ones. Let's go out to a name maybe you don't think about on a day like today, but it makes some sense when you stop and kind of pause to consider it, because they do produce a lot of their wares over in that part of the world. This is Mattel, of course, the big toy company out there. They're trading right now, ticker symbol MAT, of course, M-A-T. Trading right now, $10.50 off $1.10, or about 9.5%. This is the name that's kind of been all over the place over the last year. They were trading, a year ago, they're trading $14.71, so well north of where they are right now. And they sold off over the course of the year to below where they are now. They actually hit a low of about $9.06. That was back in August of last year, so maybe some bad earnings or some other developments either way. Not looking good there for them back in August. Then they rallied all the way back up to about 14 and change, 14.63 back in January into February. It seemed like maybe the bloom was back on the rose for Mattel. And then we all know what happened in February and beyond. Not exactly a lot of good headlines, and they sold off pretty hard down to about $11.65. Seemed to have rebounded lately, up to nearly $13 again. That was on March 4th, and then right back down again as the market has sucked it back down again. So Mattel now finds itself not quite at its 52-week low, but about $1 and change north of it, right around $10.50 right now. Let's see what our Eye of Sauron found. That's a pretty large print for a single name equity, one of the larger ones we've seen coming across our radar out here in a while. These are the April 9 puts, so $1 and change out of the money, pretty close, I should say, to that 52-week low, going up for 37 cents right off the bid. These are 35 cents at 60 cents, 41,813 times. Yeah, interesting stuff. Worth noting, Matt was halted earlier today. I'm not trying to see if they're still halted, but of course, this one kind of got stopped, as a lot of names did when they had such a big big pronounced sell-off out there. Looks like it is ticking again. Let's see. There are earnings in this name. The earnings are in April, so that puts it, I believe, right outside the expiration cycle. Let's just check really quickly. Yeah, the expiration's on the 17th. Earnings are on the 23rd in April. So these are line-in-the-sand puts for size right outside the earnings cycle here. Mr. Meatball, kind of an interesting print. Not what I expected when we fired up the Eye of Sauron today, what was going to come out at me today. Massive line in the sand in Mattel a few months out in a name that was halted earlier today and not including the earnings. What can you possibly make, sir, of this kind of put madness in Mattel, sir?
Yeah, I think it's somebody going for yield on a stock that, maybe a little less correlated to the overall market. Toys are a little stickier, and maybe making and not having to actually deal with earnings. Maybe they're excited about everything going on with Barbie and Hot Wheels and Thomas and Friends and the Mega Bloks Masters of the Universe.
That's the big news. Motu is coming back, sir. Coming back hot and heavy. That's what this guy's thinking when he sells his puts.
I was thinking about that. Well, Masters of the Universe, there's a new Netflix series coming out. There's all kinds of toys coming out.
Motu's back, baby.
Should be exciting. I'm looking forward to it. I was Mark, a couple weekends ago, I was at the Austin Toy Museum. They had a pretty neat setup of everything. So I was enjoying their old school Masters of the Universe setup that they had with, they had everybody there from Manny Faces to Stinkor, and was enjoying that. So this may be just somebody just looking to get some yield that's willing to take delivery, below $9. And so that's kind of what I think it is. It also could be a play that there's going to be a lot of sales of the Kerplunk board game.
I like that these are Motu Masters of the Universe puts. I like that. I'm looking at a Manny Faces in a trap jar right now in the old studio, so I can certainly get behind that little bit of renewed resurgence of Motu love out there. In case you don't feel like doing the math, listeners, that's about 1.5, a little more than that, almost 1.6 million in a little bit of premium coming off the table. So if this thing stays above $9, this guy's sitting on 1.55 or so million bucks. Of course, a lot of capital tied up in 41,000 puts, so it's not like he's free money, but still a decent chunk of change for holding on to these stocks. Of course, if we see Mattel's production get shut down, we could break through that 9 handle to the downside. So he could be wearing it, but he's got some wiggle room to the downside on this one. And of course, once Motu kicks in, man, all bets are off to the upside. All right, let's see where other bets our Eye of Sauron is finding. I like he's finding some weird names today. Next up, we got Contour Brands, Kontoor. Contour Brands, I believe they own Wrangler and Lee and a bunch of denim kind of jeans brands, effectively. Here, ticker symbol KTB. Trading right now $30.18, off about $3.30 or nearly 10% for this one as well. So this one also outpacing the market to the downside. This one was also halted today as well. So not a great day here for Contour Brands. Let's see how the year has been out here as well. A year ago, they were trading well north of where they are right now. They're trading $40.50 exactly. Then they kind of did what they're doing right now. They sold off pretty hard. By June, they were down to $27.60. They hit their low actually of the year right around then of $25.78. So they sold off pretty hard then. Then they rallied back to 33, and they kind of were slowly moving on up again, like the Jeffersons got up to 40.25 by October. Sold off a little bit again, back down to 35 in November, then rallying up beginning of the year, looking pretty good when the rest of the market was in boom mode. They were as well, got up to their 52-week high of about 43 and change, 43.25, right in the early to mid-January before they started selling off, and all these coronavirus fears, I should say, started appearing in the marketplace, and we saw kind of the near-term high was on Valentine's Day, like with a lot of the market, 41, almost $42, and now they're about $12 shy of that, and testing some, I guess, no love for the Levi's jeans out there, or Lee jeans, I should say in this case, and Wrangler, and also probably maybe some manufacturing woes baked into that as well. Let's see all of that. Let's see what our Eye of Sauron found out here. Another pretty sizable print out here today. These are the April 22 half puts going up. Looks like another kind of line in the sand, going up for 16 cents. I love this market. These things were a dime at $1.40. That's kind of the definition of a fast market type market here. You can understand it. Things were halted. This is coming out close. This was 11 o'clock, so not quite on the open, a little bit later. But still, that's a pretty crazy market. This guy decided he's not going to play around. He's going to crush that bid 17,400 times for 16 cents. There are earnings, but after this cycle, the earnings are May 12th. So these 22 app puts for 16 cents. Another one, kind of a similar scenario here, Mr. Meatball. We've got pretty decently out of the money puts going up for pretty decent size in a name that was halted earlier today and also in April, sir. So what do you think of this one? This time in, I'm sure maybe one of your wife's favorite names, Contour Brand. She's up on all the apparel names, right?
Yeah, this is, not one that she trades a bunch, but I think that you've probably hit the nail on the head on this one.
I have been known to do that on occasion. Your wife's not big on the denim these days, huh, sir?
Well, she is, but more, jean jackets are huge. Levi's is making a big comeback. I'm currently wearing, I gotta take I don't remember exactly what I'm wearing, but it's not Contour Brands. I gotta tell you that the one, if you're looking for a retailer that will have permanent demand. All right. If you want to know the one retail stock that will never lose money, Spanx.
That's true. Ladies will always need those.
That has inelastic demand. Spanx has inelastic demand.
So you got the old school Philip Morris and you got Spanx, the two really big inelastic demand names out there in the marketplace. Let's see what our final Eye of... So actually, we're going to go back a little bit for our final Eye of Sauron. We're going to take a break from the madness, the maelstrom of today, go back a little bit, all the way to the heady days of yesteryear, a.k.a. February 10th. Not quite exactly a month ago, listeners. Oh, what innocent times they were. In retrospect, we were coming up on Valentine's Day. That was going to be the high for the market. Who knew? And all seemed rosy with the world. The coronavirus was kind of just a discounted risk. No one was really worried about. All dogs and cats were happy. They weren't living together. It wasn't mass hysteria. But now we fast forward a month. Let's go back to what we talked about. And on that show on February 10th, there was some size call love out there in Liberty Global. These were actual ticker symbol LBTYK. I believe this is one of the class C of this type of shares. At the time, we were talking about 10,000 of the Feb 20s going up out there for, 28 cents. Paper was pretty much lifting the offer. They were 15 cents at 30, and paper was gobbling these bad boys up. This was opening, obviously, and there were earnings coming up a couple of days after that. There were earnings on the 13th. Total of nearly 20,000 went up on that day, but I think that was a lot of back and forth ahead of the earnings, too. I'm going to focus mostly on this 10,000 lot because that seems to be pretty much the one single big trade of that day that we could focus on. The rest was kind of, I think, noise heading into earnings. The stock worth noting on that day, the 10th of February, closed at about $19.32, so was looking shy of that 20 handle. The 20 handle seemed decent, but not a crazy bit. And looks like it actually worked out pretty well in the initial blush there because someone came in and dumped these actually one day later for 80 cents. So they waited only a day. They got pretty much 50 cents on these bad boys. So not bad. $500,000 in your pocket, roughly, doing that about 10,000 times. But looks like they didn't stop there. That same day, they rolled them out to the March 20s, also 10,000 times. So they took that 50 cents they made on those Feb calls and rolled them out to March. They paid $1.20 for those. So those were a wee bit richer, about $1 almost richer than what they paid for the Feb. So seems like they were convinced putting that money back to work, the $500,000 they made back to work. And it seems like that second leg, maybe they should have got out while the getting was good. That second leg, maybe a bit ill-timed because the stock pretty much hasn't looked back It was at 17.5 this morning. Now it's 17.08, so it's off another 6% today. So pretty much they rolled it close to the high right after earnings. It never really looked back. So this is a good case of take your money. You more than doubled your money on these calls. You more than doubled money on these calls. So get out, take your profits, and be happy. These calls right now, not surprisingly, are still open in March, and they're only worth 6 cents. So you make $500,000 the first time only to put it back to work and then give up $1.2 million. Perhaps, again, these aren't closed yet. We could see a rally in this name, but it would have to be a pretty impressive rally to go all the way back up to 20 in the near future. So, Mr. Meatball, maybe a bit of a lesson packed into these bad boys of maybe take your money off the table and get while the getting is good, sir. Would you concur?
I agree. Yeah, when a trade works out, take your money. That's I think one of the most common foibles of traders is they don't take their dollars. So that's and you see it all the time. They don't. They fail to capitalize. But you never know. It could be because that's the other half of something else that can be a problem. But that is definitely something to be concerned about if you are a trader is taking profits when you have the chance.
Indeed. And we have a chance. It is Monday. We like to do some strategy block, but I think a lot of people have some questions on a day like today. So let's see if we can squeeze a few of the folks on here, probably combine a strat block with a mail block here, because I got to imagine some of your questions fall along similar lines as we head on into a special Monday edition of the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, so we're getting a slew of questions, as you might imagine, on a day like today. A lot of them seem to be centralized around a couple of themes. So I guess I'll kind of lump them together and let everyone kind of take a swing at them here as we're rolling into the end of the show here. Ilian says, "This is nuts." Yeah, I'm with you, Ilian. He says, I'm thinking about starting to nibble at these levels. What are your preferred ways to use options now to start nibbling without losing my shirt if the market continues crapping out? I don't want to just load up on overpriced puts. Well, yeah, I'm with you there. Obviously, that's maybe your first temptation. Look at the puts and you see how these things are trading. You're like, maybe I don't want to just buy those. So yeah, I don't think any of us are going to recommend go up and just load up on straight up puts. We have some other suggestions, and we have another question that's related. I'll get to that when we get to the meatball in a second. But first, Mr. Uncle Mike, let's start here. You were kind of talking before about you have your short put strikes in place. That's where you're going to start nibbling right now. I'm sure you're getting this question a lot from your clients right now as well. I want to start maybe nibbling at these levels or maybe a little bit below using options. What's your preferred MO, sir?
Well, the first thing I think you need to emphasize on this is that if you're nibbling, how long do you plan on holding the stock? So in other words, if you plan just holding the stock for a month or two, then no, I think it's a horrible time to nibble. I think you need to get out and not have any part of this market if that's what your plan is, quite frankly. If you plan on holding the stock for a longer time frame, let's say that you're willing to hold on to it through thick and thin for the next 5 years or so, then I think selling a put would be an awesome way to start nibbling right now if you wanted to do that. The beauty of the market right now is that you can sell puts for much further out of the money than you ever could before for a lesser monetary risk. Or if you are selling puts closer to the current price of the underlying, then you're going to be getting more premium for it. So short put is the way that I would do it if I was looking to nibble to get back into the marketplace. Another way with which you can do it would be to do a put ratio. So let's say XYZ stock is at 300. And you're thinking, okay, I wouldn't mind owning this stock at, say, 270. Perhaps buy a 300 put and then sell two, not one, but two 270 puts. And then by doing that, you could have the stock put to you at 270 if it were to go down further, and you would get paid $30 on the way down. Now, keep in mind, this would be if you can find something like that for an even money trade. Meaning the two puts that you sell offsets the cost of the one put with which you buy. So I like getting in, if you are looking to nibble, using a put ratio or just selling puts to begin with. But once again, what's your time horizon? If your time horizon is 1 week or 1 month, then I think you just need to stay out.
Yeah, I'm definitely down with the put ratios here. That's what I've been talking to people about here when they've been writing in inevitably here. You can do some interesting things with the ratios, and even in names like SPY where the puts are pretty overpriced, take advantage of that nice skew. The far out of the money puts are still pretty overpriced. So if you like to have a little bit of cushion as opposed to just blasting out the put there where you get a little bit nervous, maybe that's not your risk tolerance. You want to have a little bit of cushion to the downside, but also get long at these levels. If you start breaking through certain levels, the ratio put spread, I think, is certainly an intriguing one to look at with those caveats that Uncle Mike mentioned. Mr. Meatball, same question for you, and also I'm gonna add on an addendum for you as well. We got a specific question for you coming in from the live chat from Tony. Tony Weber wants to know. He says, the greasiest of meatballs. What is your favorite VIX option strategy for a plus 50 VIX? Do you sell in the money short term? He wants to know right around March, expiring on the 17th of March. So weeklies in the VIX calls against long-term calls. So a bit of a calendar spread, or is this, quote, VIX made stupid? I guess he must know your stuff. He's referencing your VIX made easy, it sounds like. So a couple of questions for you. First off, what's your favorite way? Let's go to Ilian first, to use options to nibble right now, if you were so inclined. And then B, the addendum from Tony. What's your favorite VIX option strategy for a plus 50 VIX, sir? Combo question.
Well, one of the things, let's start with the nibbling. If you want to go along this market, then some things that are interesting are like a VIX call and a VIX call merged with a short 1x2. So, or like a short put. So selling a put on SPY to take delivery with a couple of long VIX calls makes a lot of sense. Obviously, it need to be fit to a portfolio. I'm not suggesting everybody go out and do that. In terms of how to play VIX itself, the idea that it makes sense to try and short this thing is folly, right? The VIX is one of those things where you want to buy high and sell higher, and it can just keep going and going and going. It could run so hot with the massive, massive backwardation we have right now, right? It's not just March is 8 points below the cash, but 9 points above April, which is 7.5 points above May. And May is a full 4 points above July. This is we have volatility for the next 6-7 months type of market, folks. Not this will all be over in a week. So I am, the trade that I like is a piggyback off of a customer trade from this morning. A customer came in and bought the 50, 60, 70 butterfly for $1.20. I think that's a great trade to play the VIX kind of creeping higher, staying around here. I like trades where I'm in the money with the cash and out of the money with the future. Those I feel like have the most opportunity to grow and give me kind of the most leeway. And so I don't see a lot of stuff out there that makes me want to short. In terms of other things, I think the ETNs make a lot of sense, the ETPs. VXX, I like short-term weeklies, medium-term weeklies. There's a lot of upside pressure on that name. It's getting a lot of good exposure. You can let VXX actually do the rolling for you. So there is a lot of opportunity there in VIX to play it bullish. If you're looking to play bearish, the trade that we discussed, a variant of the trade that we discussed on Friday's Volatility View show, the March 1x3x2, the ratio was a great trade. It was the 42.5, 35, 30 put 1x3x2. That was a great trade. That customer did really well. I piggybacked him and was out of it. So with the market up, that spread made money this morning. So there is an opportunity to do ratios and things like that make total sense in the VIX product, where you're trying to put maybe a little bit of an aim on where you think VIX might go.
Yeah, if you're not sure what we're talking about, I was thinking about that guy this morning, too, on the open, how that spread was going to look. If you're not sure what spread we're talking about, listeners, check out our analysis of that and a lot more on Volatility Views. It's already on the network. Don't do it now, though, because you're listening to us right now. As we keep on rolling to our final segment, it's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, welcome to Around the Block, where we tell you what we're watching for the rest of this week until we all gather here together on Thursday. I think you can probably guess what we're watching, but we can add to that. Of course, I mentioned at the top of the show, there are still some earnings if you do want to focus on the micro. I highlighted all those. Of course, you can find that all and a lot more at theoptionsinsider.com. Click on the News and Articles tab there on the homepage to get into all the earnings move and earnings move results reports. It's a nice salve, a nice little cleanser of the palate, perhaps on a crazy day like today, to calm down. Look at some micro and focus on those for a little bit. Things you can actually sink your teeth into and analyze with perhaps a little bit more easily than the crazy macro currents that we're all being buffeted about by these days. Let's go back around the horn. Let's start with Uncle Mike, sir. What is on your radar for the rest of this week? Obviously, it's Corona-related. Or perhaps any key levels you're focusing on, or what are you really watching this week?
Yeah, I'm looking at 266 on SPY. That was the open of the 2019. Or I'm sorry, that was the open of 2017. And so watching 250 on SPY. That was the close, the close of 2017. So just watching those two levels, because in 2019 we had the big up year, 2018 we were down roughly 6%. So now we're going back to the 2017 levels and just trying to look at those. The other thing that I'm watching is last hour of the day, just with the funds getting potential margin calls at the end of the day, just seeing how the market will react to that, if indeed that does happen, or if large funds, of course, have already taken care of that. So those are the two main things with which I'm watching today, along with, everything.
Mr. Meatball, same question for you. Obviously, we're all fixated on all things Corona. Are there some key levels, perhaps in VIX, that you're keying in on right now, sir?
I mean, it's hard to have a key level at this point, right? It could just keep going up and up and up. What I am watching is oil, and I'm watching the financials. I think you want to know what the market, whether this is going to turn into something really bad. Today, XLF is only down about 10%. The XLE is down 20. Everything else is not down that much. XLF is the one that could take everything down with it. So if those financials start to get really ugly, then what happens with oil? So people don't understand, real briefly, let me walk you through this. So it's not that oil that is down that's actually going to pull Apple down. It's that oil is down and XLF is down. So we start having some real problems in that sector. So you have all kinds of losers there. Well, then what happens is people that get margin calls, people that need extra cash, people that need this, they sell their winners to then either buy more of their losers or to cover the margin on their losers. And then you have selling in the non-correlated names, the non-oil correlated names. So that's where you get, the NASDAQ 100 being down, almost as much as the Dow and the S&P. So I'm watching oil and the financials really closely. And then obviously some of those healthcare stocks, there are, with the 10-year treasury now at 50 basis points, there are some stocks that start to, that at these levels with giant dividends that start to look really interesting. You could really show me XLU or even like a Verizon or an AT&T that start to look interesting. So there's a lot I'm watching, but don't think because your company your holding has nothing to do with oil or healthcare or China that it's not going to absolutely get face punched if we take things lower.
Yeah, that was an interesting discussion point at the RMC last week as well, was just the search for yield, with yield evaporating in the traditional stalwarts. All of a sudden that S&P dividend yield looks pretty good, and some of these names, you're right, people are looking to equities for yield. which is intriguing given the state of equities out there right now. So a lot of potential shoes to drop out there. Of course, if you're saying to yourself, I need more hand-holding in this market, I need more people maybe talk me off the ledge or perhaps talk you onto it, depending on which way you lean. Stay tuned. If you want to listen to how you hedge a pandemic and how your asset manager maybe should be doing that, stay tuned. If you're listening live, I will pump that into the live stream for you, pumping in our advisor's option, how to hedge a pandemic. It's a fun one. I'll be back in exactly an hour. The good buddy there, Mr. Bill, former market maker over there. And the CBOL, like myself, also a money manager out there. We're going to be talking crypto, but we'll probably talk a little bit at the start, too, about what's going on in this broad equity landscape because it's kind of inescapable in these moments, and he's certainly managing a lot of that money as well. So stay tuned for that in exactly an hour. But before we go, let's go back around the horn. Let's go back to Uncle Mike, sir. If I want someone, perhaps I need someone in this environment to hold my hand through these markets and talk me off the cliff, or perhaps put some puts on for me, where should I go? What should I do, sir?
Call me. Go to my website, stcharleswealth.com. Find my information. Be more than happy to have a conversation.
stcharleswealth.com. Click on the Fox for fabulous prizes. All right. And Mr. Meatball, sir, I can't imagine a better time to want to join a cool ball trading club, not just with the hats. So if I want to get more of that action, where should I go? What should I do, sir?
Yeah, Thursday we're going to do a live webinar covering VIX. If you're not on our email list, go to OUTAGE.com, get on the email list so that you can get attention. I think Mark will probably let our tweeps and listeners know how to get on that as well. But just be on the lookout for that. Talk to you soon.
There you go. Be on the lookout for that as well. OptionPit.com is the place to begin that journey. And on behalf of the Greasiest and Meatballs and Uncle Mike and indeed myself, I want to thank all of you for downloading, streaming, subscribing, for tuning in live, for sending in such questions. Easy for me to say, keep them coming. Maybe we need to do a whole Q&A show. In fact, spoiler alert, we're going to bring back boot camp this week because a lot of you have asked for that in this environment as well. So we'll be bringing that back live, I think, in a day or two with myself and Mr. Passarelli over there as well. So bringing back some boot camp, all your questions answered and a whole lot more. And, of course, we'll be back in exactly an hour talking all things crypto, probably a little bit of current market and the equity landscape and volatility landscape as well. And otherwise, we'll see you back here later this week for OPR and all the other fun stuff we're doing, including boot camp, and then back again on Thursday for TWIFO and, of course, for the option block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.